Hello, my name is Jeff Rinaldi. I'm with Document Security Systems, and I'll go through our business plan today and highlight some of the opportunities we have in front of us. Next slide is our cautionary note regarding forward-looking statements. You can read that at your leisure. Also important additional information filed with the SEC. The meat of the presentation starts on page 3. And what we have here is a merger. Document Security Systems is merging with Lexington Technology Group. Document Security Systems is an NYSE traded stock under the stock symbol DSS. Market cap is roughly $50 to $60 million, and it's a leader in anti-counterfeit and anti-fraud technologies. They provide turnkey solutions to governments and corporations to help them protect against cloned products. Has a patent portfolio of 9 patents and 12 pending applications. Lexington is a private company. It's a patent holding and management company with the intent to acquire patents and monetize them. They have 2 current investments, one called Bascom Research, which pertains to social network data structures, and a second in Virtual Agility, which is a middleware software company, and I'll get into those a little bit farther into the presentation. Next slide, slide 4. This is the post-merger management profiles. I'm currently the CEO of Lexington Technology Group and will become the CEO of the combined companies on July 1st. My background is I have a number of years doing technology startups, including a company called UUNet Technologies, where we helped take them public in 1995, a company called Concentric Network, which we helped go public in 1997. Both those are internet providers. I also worked for an industrial manufacturer called SPX Corporation, former CEO of newsletters.com. In the patent space, I was a CEO of a Juridica company called Turtle Bay Technologies, and have had a number of successes doing patent monetization, including a $60 million verdict against Microsoft, a $50 million verdict against Genzyme, and a $20 million verdict against SSL. Joining me from Lexington side is Peter Hartigan, who is our Chief Operating Officer. Peter has been in the patent monetization space for over 5 years. He used to work at Charles River on the sell side. That's actually where I met him, where he was selling assets from Fortune 500 clients. He will become the new COO of the combined company. From DSS, the current is Robert Bisdick. He has over 29 years of experience in manufacturing management and was the CEO of a company called Premier Packaging, which DSS acquired 3 years ago. Robert will stay on as president, which I'm very excited about because he brings a wealth of opportunity that's needed to keep the company going and moving in the right direction. Also staying on is the current CFO. He has over 17 years experience in the accounting and finance sector for public companies. Going on to the next slide, slide 5. Why are we making this merger? And there's a strategy here. And the strategy is DSS has a strong history of technology development, but has had limited success in licensing and enforcing those technologies. So the background of the company was they helped create some of the early stages anti-counterfeit, anti-fraud technologies that are embedded into currency today. They attempted to go license or monetize that IP unsuccessfully over the last 5 to 10 years. What Lexington brings to the table is an experienced IP management team that has a proven track record of success. Operationally, DSS has an R&D and technical expertise that Lexington can leverage as we evaluate new opportunities. DSS has an existing management and provides already a public reporting sector, which is very helpful to us. And Lexington is coming to the merger with cash, and which would help continue the product development that DSS has started. Lexington also has an investment deal flow and relationships that can help grow the combined company. Lexington also brings IP assets that we believe that are being practiced today by technology and Fortune 500 companies, specifically inside the Bascom portfolio and the virtual agility portfolio. DSS has an integrated security technology, which has some embedded licensing opportunity. And Lexington can help evaluate that and actually go act on it. DSS also has existing litigation and opportunities within its IP portfolio that Lexington can help manage because we've been through this process. In 2012, DSS retained John Cronin, a very well-respected IP strategist, to help create the new strategy going forward, and it led to several new patent applications for an integrated security solution. Going on to slide 6. What DSS and Lexington's business model to combine entities, the advantages for patent owners. There's a secondary market for patent owners. Why would they come to us? And it essentially comes down to, we have a team that we put together has created a lot of success. Our track record speaks for themselves. We have capital and a willingness and a desire to fund operations. We have access to the venture world, incubators, technical experts, et cetera. And we can provide liquidity and upside for investors. Going the other route with what's being said a lot in the press these days is a non-practicing entity. That also involves assignment of assets. You get a minimum upfront capital and several other factors you're unable to get, like no injunctive relief. Going on to page 7. Here we're just highlighting some of the market dynamics in the IP space. The global IP licensing market has grown dramatically over the last 30 to 40 years. And there's some landmark deals we've highlighted here, including the Microsoft's acquisition of the AOL portfolio for $1.1 billion, Google's acquisition of Motorola Mobility for $12.5 billion, and Rockstar acquiring the Nortel portfolio for $4.5 billion. Some of these other ones that we've highlighted are landmark licensing deals or verdicts, settlements, et cetera. Samsung reached a settlement with Apple for $1.1 billion, NVIDIA, Intel, $1.5 billion, Microsoft Phonetics for $200 million, and the very famous one, the RIM NTP, is $600 million. What we're doing here is just highlighting some high-level cases of what's happening in the IP space and the patent space. Here's a chart that on page 8, the industry landscape. This is the IP monetization. And with IP monetization, there's basically 4 ways to do it, with a 5th being a offshoot of the other 4. The first is what most people know about, is commercialization. This is where a company creates a product and sells a product in the space and protects their position by the creation of patents. So they're actually selling product here. The next one down is carrot licensing. This is where you ask others to license your technology without the threat of litigation. This is fairly common in universities and R&D centers who do not have the desire to do any of the next 2 forms of licensing. The next is a stick licensing. That's a more aggressive way of getting licensing. That's where you basically threaten litigation. So if you don't sign a license, we're going to hit you with a stick. That stick being litigation. The last one, as far as activities go, is enforcement. And enforcement is actually the filing of a lawsuit. And over the last 10 years, some court decisions have required that people who want to just be in the patent monetization space can only go straight to enforcement. They can't do carrot or stick licensing anymore. And what we have over the top are the various companies in this space and what each one is doing. And what we're highlighting here is the combination of DSS and Lexington is actually each of these 4 areas. We have product, DSS is a company with $17 million in revenue, 100 employees. They make a wide variety of products and services in the anti-counterfeit, anti-fraud space. They have printing capabilities, they have packaging. And so we've done and will continue to do each one of these different layers of monetization. And the last group that we talk about is the buying group. And the buying group is companies like RPX, which acts as a settlement agent between plaintiffs and defendants. So other companies up here like Acacia, all they're doing is stick licensing and enforcement, and you can read the rest. Rambus and Qualcomm, they're also doing a lot of carrot and stick licensing, but not doing enforcement. We have the capability to do all the above. Going on to slide 9, this is the current portfolio within the Lexington and DSS combination of opportunities. First opportunity, or the first investment that Lexington has made, is in a portfolio called Bascom Research. It's 6 issued patents, 4 pending applications. The technology has to do with data structure used to build social networks. The case was filed in October of 2012. We've had 2 settlements to date, one at 5% royalty rate, the other one at 4%. And we're excited to see that our Markman hearing, which is a key milestone in patent litigation, is scheduled for October 2nd of this year, which is about 6 months earlier than we had anticipated. And we're anticipating a trial date of 2014, 2015. That's up to the court to decide when the trial will be. The current defendants are Facebook, LinkedIn, and Novell. Second investment is a minority equity investment into a company called Virtual Agility. Virtual Agility is an operating company based out of Boston. They make a middleware that allows non-technical users to, in essence, be programmers. They have 5 existing patents, 5 pending. They filed a case in January of this year in Eastern District of Texas against Salesforce, BMC Software, Dell Computer, Bank of America, and a number of other defendants. We're still waiting on the court to decide whether this case will stay in Texas or not. We expect if it does, we'll have a Markman in 2014 or 15 and trial in 2015 or 16. With this investment, Virtual Agility is, we're actually using the Virtual Agility technology within one of our new product launches that are coming out that I'll talk about later, as we are also using the Bascom Research technology. The last one is a case that has been going on for a while. It's a breach of contract case that DSS has had against coupons.com. It was filed in 2011 and entered the discovery stage in 2013, and a trial date has yet to be determined. Our growth strategy is to mine the DSS portfolio for licensing and enforcement opportunities and pursue acquisitions in our current pipeline. Page 10 is an overview and more detail about the Bascom patents, have the story behind the invention, who invented it, etc. It was invented by a gentleman by the name of Tom Bascom and from McLean, Virginia. Next slide, slide 11, is the case and potential timeline. So we just highlighted the fact that the Markman hearing is in October of 2013. We had 2 settlements already in the May-June timeframe. And so we're moving forward faster than we anticipated. Next slide is the Virtual Agility overview. Lexington has a minority equity investment in Virtual Agility, 5 patents, 5 pending, and Lexington actually is using their technology in our new product. And again, just more detail about the Virtual Agility investment. Slide 13, DSS IP management. So DSS has a portfolio of 9 patents, 12 pending applications. They're in the digital and cloud portfolio. They have 5 patents and additional concepts in development. They already have existing licensing relationships with international security printers and other securities product suppliers. Current IP enforcement is a case against coupons, what we just talked about, in the Western District of New York, and it's in discovery stage as we talk. Next slide, slide 14. Growth drivers, basically talking about our pipeline. We look to acquire new patent portfolios and make investments in operating companies that we believe have strong IP assets that will provide to us the technical expertise to enhance our own product line. The current pipeline, where the deals come from, they come from personal relationships. Many of us have been in the business a long time, but also investors, venture capitalists, hedge funds, universities, research institutes, and also service providers like bankers, lawyers, brokers, etc. Slide 15 talks about the DSS operating business. As we said, it's a leading provider in anti-counterfeit and authentication technologies with customers worldwide. It works closely with clients, including Fortune 500 companies, to design proprietary technology solutions, protecting government documents, identity cards, academic records, valuable documents, coupons, consumer packaging, and supply chains. It's R&D focused and has helped create industry standard technology that's used by the U.S. government. The counterfeiting marketplace is a $1 trillion global losses, $250 billion attributed to the U.S. alone, and is expected to grow to $79 billion by the year 2014. Some of the key markets are pharmaceuticals, cosmetics, apparel, and high-value consumer goods. On the right, you'll see a chart, and this is where DSS talks about providing security as a service so that we can keep track of certain documents and consumable goods through the cloud, through the internet, and be used in all different ways, whether it's a laptop or printer, emails, etc. Slide 16 is a new product that's been launched by DSS, a very exciting new product for us. This really could be a game changer for DSS. What it is integrating the various technologies and provide a solution for manufacturers to keep track of their products. So the product is called AuthentiGuard. There's three components to it. One is the Prism mark. This is an authentication marker using the covert Prism technology. So it basically works as a digital watermark. There's an app on your smartphone, and you can find your information through an internet portal. Slide 17 is a high-level view of some financials. As you can see, revenue has been growing steadily. Operating expenses have been moving in line in the direction we want, and the adjusted EBITDA number has been moving in the right direction with a loss of $1.3 million for the year 2012. And finally, page 18, strategic goals from the DSS side is to take DSS, standalone DSS, and make it break even, continue revenue, control costs. 2 is convert the new product, the AuthentiGuard product, and convert the beta testing that they have lined up into revenues with pharmaceutical companies, luxury goods, consumer products, things like that, and also look through their patent portfolio for new opportunities. On the Lexington side, we'll go through and monetize the portfolios that we had talked about, Bascom and Virtual Agility, and look to make new investments in operating companies that have strong IP. And that's what we have for today. Thank you very much for your time.